What's going on, everybody? Welcome to our August 27th edition of This Week in Crypto. I'm your host, Brian, alongside Dino here. And it's been a wild week of crypto. We're seeing, massive 5+% tumbles across the board. At one point, rebounding back up 5% the next hour. It's basically a massive increased volatility time right now, and we'll be touching a little bit on why shortly. A lot of that probably has to do with the close to, if not all-time high, exchange inflow that we saw yesterday in Bitcoin. It's really shook things up a lot. Right now, we're rebounding back up, which is, a relief to many to see that. But as it was happening yesterday, markets were sliding down, especially the altcoins. They were really taking a hit. And we'll look into alts, of course. If you have specific requests on which altcoins you'd like us to look into, as always, you can add on to the poll, give your suggestions, and we'll be sure to take 2 or 3 of them on the last third or so of the call here. And of course, we'll be spending a significant amount of time talking about Bitcoin, a little bit of Ethereum. And as always, I want to remind everyone that we are here to show objectively what the data is saying on our platform. We're not here to give investment advice. It's not what we're in the business of doing. And we just ask that you look at everything we're talking about through that frame. So with that being said, we are starting with our screener here. And it's quite a mixed bag, just as you might expect when you're having this kind of volatility right now. If you've been on our calls for the last 4 to 6 weeks or so, it's been mostly a sea of green. Altcoins especially have just been, these were kind of like the average altcoin returns over those last few weeks here. Everything up, 20+%. It was kind of a party. Now we're seeing, 2/3 of them, maybe a little less, maybe like somewhere between 50 to 55% of them are in the red over the past week. Significant losers like the Graph, XDC, Audius, they really took quite a slide down and haven't recovered yet. But many, like Solana, for example, they've been extra volatile, but as of now, it's rebounding pretty significantly. Hex has had a nice week. Binance Coin, Cardano is still up. Cardano is another one that in the early part of the week was really firing off, had an all-time high broken. SafeMoon, Bitcoin Cash, quite a few. And Dino, if you have a few assets that you've been watching closely, I'd love to. I know myself and the rest of the channel would love to hear what you've been seeing.
Yeah, we've been a couple of us at Santiment have been checking out Enzym and iFi in particular, and we sort of wrote a couple of insights this week on insights.santiment.net. I think Gary can share them in the stream. I don't think those are, Enzym in particular has been pumping like crazy recently. I think it's currently up by something about somewhere around like 80%. Let me check. But anyway, the reason, 37% at the moment in the last 7 days. But within the maybe last 48 hours, there has been a massive spike or uptick in the price of MLN. The reason why we were checking out MLN in particular is that some of our signals have triggered, suggesting that there might be a rising sell side pressure and a potential for local top for MLN. And currently, or so far, that seems to be the case. There has been sort of a period of consolidation around the last 24 to 36 hours, but I'm not going to get into that all that much during this call, unless people want us to talk about MLN, and then we can really dive deep into the metrics. But yeah, there's certainly been quite a few coins that have been doing very well for themselves. But I think in particular, what's been more interesting to me than anything that I've seen in alts this week is what Bitcoin has been doing, and especially what Bitcoin's exchange metrics have been doing. So I made a video about this a couple of days ago, and I think, Brian, it's still one of a larger talking points that we should address during this call, where both this week, both in Bitcoin and Ethereum, we have seen these massive outliers in the amount of BTC and ETH moving to known exchange wallets. And the question is, what does this mean? Is this just pure added sell side pressure? And if so, how is it going to impact the market? So those and some other questions continue to linger, and I think we can try and answer at least partially some of them during this call.
Yeah, absolutely. We'll jump right into the most important one, just as you mentioned, Dino, which was exchange inflow. We'll look at Bitcoin first, briefly touch on Ethereum as well. But this is the last 6 months of exchange inflow here in red, exchange outflow here in yellow, and then the difference between that inflow and outflow as time goes on. I'm actually going to switch this to 1 day just for consistency. And so what we can see over time is, an inflow that's averaging anywhere from maybe 78K, it looks like at a low, to 540K at a high on May 19th when the markets were tumbling. And then we mosey on over here. It's still staying in that range. And then boom, we have exchange inflows of 860 on the 23rd, 883 on the 24th, 915 on the 25th, and then 1.74 million on August 26th, yesterday. This was, when I checked at the time, it was tied with the largest of all time that happened in June of 2019. I think it actually exceeded it. Is that what you saw as well, Dino?
It was fairly close, but obviously, so this is where we should really sort of make a few remarks about differences between exchange inflow, exchange outflow, and exchange flow balance, and then also the supply of Bitcoin on exchanges, because all 4 of those metrics should be consulted when sort of analyzing this type of activity. So let's start with the first spike in exchange inflow for Bitcoin, which happened, I believe it was on Monday. Yeah, so Brian, if you maybe switch the interval to less than a day, maybe let's say 8 hours or something, we'll see exactly when it happened.
I'll just take off the other 2 for now.
Sure. Yeah, so that's the first one. Now, I think that's a more legitimate spike in exchange inflow for Bitcoin, and it came right as BTC was trying to push above 50K. It suggested that all of a sudden there's this massive amount of BTC moving to known exchange wallets, the largest spike in Bitcoin's exchange inflow since Black Thursday, which was a massive capitulation event. So it was definitely a major anomaly in Bitcoin's on-chain data one way or another. And so one of the reasons why I thought this was a more legitimate spike in exchange inflow and generally a likelier culprit for added sell side pressure is because what other metrics have shown us as well. So when we look at exchange inflow here, we can see a massive spike, of course. However, you also need to consult several other metrics to confirm that this is in fact new sell side pressure being added and not just coins being moved, let's say, from Binance to an intermediary address and then moving back to, I don't know, Kraken or OKX or whatever. So one way that you can sort of figure out if that's the case or not is by looking at something like exchange flow balance for Bitcoin. So exchange flow balance is a metric that tracks the difference between coins moving into known exchange wallets and coins moving out of known exchange wallets. And then if you look at that first massive spike right there you go. So right there on Monday, as Bitcoin was sort of trying to push above 50K, the one before that. Yeah, so if you look at the one at the start of the week, the relatively big spike in exchange flow balance, which now kind of even looks relatively small. It was the second highest spike in Bitcoin's exchange flow balance or net flow since the corrections on May 12th. So it was one of the largest amounts of BTC moving into exchanges compared to BTC moving out of exchanges. So that to me suggested that there's a increased likelihood that this isn't some sort of arbitrage or some sort of reshuffling of coins among exchange wallets, but rather there was added new BTC, added supply of BTC moving to exchanges. And then finally, the way that you can further confirm this is by looking at the supply of Bitcoin on exchanges, which Brian has sort of also shown a pretty significant uptick at the start of the week. So maybe let's show that as well, the supply of BTC on exchanges as percentage of total supply, because on Monday, what we've seen as this first spike in Bitcoin's exchange inflow started to happen, we've seen a pretty sizable, as you'll see right now. Yeah, there we go. So that's the first one. You see a sort of a pretty sizable uptick in Bitcoin's availability on exchanges. So all of a sudden we go from around what that's like 13.3, 13.2% to 13.44, 45%. That's a pretty sizable uptick in the amount of BTC moving to exchanges. It's also a clear departure from a decline in the availability of Bitcoin on exchanges, which we've seen throughout the last sort of almost 2 months, right? Basically since the correction. So that all of that sort of combined suggested that this wasn't just a general reshuffling of BTC among different exchange wallets from one through an intermediary address and then finally to another exchange address, but rather this was new BTC, sort of a new amount of BTC being moved to exchanges, presumably to sell. And as a result, that was sort of a warning sign that we're looking at an increased sell side pressure. Now, I'm less concerned actually about this latter spike in Bitcoin's exchange inflow, because as you can see here on supply on exchanges, not a whole lot of dramatic moves have been made as far as the supply on exchanges over the last maybe 5 to 6 days. So yeah, you can see that massive spike in exchange inflow, but in fact, a day before that, there has been a almost exact replica on Bitcoin's exchange outflow. So I think about 48 hours ago, there was a massive amount of BTC being withdrawn from exchanges, and then earlier today, or sort of yesterday and today as well, the sort of almost same amount of BTC was starting to move back to exchanges. And that's why when you look at something like exchange flow balance and when you look at supply of Bitcoin on exchanges, not a lot has actually changed. There has been a drop around this Wednesday, and then there has been almost an exact mirror spike during the last 2 days. So this, I don't think, is actually new sell side pressure. This, I think, is more akin to, several probably large holders are looking to maybe take advantage of arbitrage opportunities and moving their coins from one exchange wallet to an intermediary address and then back to an exchange. So that isn't sort of a cumulative effect that's going to have on Bitcoin's price action like the one that we saw at the start of the week. So yeah, there's been a massive outlier in Bitcoin's exchange-related data over the last couple of days, but I'm not actually all that worried about it, because when you look at the total supply of Bitcoin on exchanges, not a lot has actually changed since the start of the week. So there's not that big spike on Monday. Yeah, it had a pretty significant or notable impact on the total supply of Bitcoin in exchanges, but these other spikes have not. So I think it's sort of the same sell side pressure that we've seen since the start of the week that we should still kind of be concerned a little bit about. I'm not exactly sure whether it has been fully absorbed by the market. It's still massive amounts of billions of dollars, both for Bitcoin and Ethereum, by the way. But Brian, these subsequent spikes in exchange inflow, I don't think they are as concerning as they might appear on first glance.
Right. I agree with what you're saying, Dino. So essentially, it's a matter of, despite the massive amount of inflow that we still may have to catch up on as far as absorbing in the markets, it hasn't translated over to a huge uptick in the percent of supply on exchanges. And we're actually still about significantly lower than we were a month ago in terms of the percent of supply, despite this, historic spike that we just saw yesterday. So yeah, it's something to keep an eye on. If this starts to correlate with the percent of supply really starting to move up over the next week, then it's another story, and it's going to start looking pretty bearish in that regard. But this could easily just be a massive event of reshuffling that is quickly kind of figured out by the markets, and we proceed with the same ranging or even a slight climb that we've been seeing as of the last week or so, I'd say, since we kind of have been in this 46K to 51K range.
Yeah, I mean, in general, the last week hasn't been kind to Bitcoin in terms of of exchange-related data on the whole. Like as Brian showed a minute ago, the supply on exchanges of Bitcoin, the supply of Bitcoin on exchanges has still grown since the start of the week. So we're still seeing sort of a mounting sell-side pressure for BTC. I'm just saying it's not as dramatic as it looks on these particular metrics. That being said, I don't think it's a great sign that we are seeing sort of elevated profit-taking activities and rising sell-side pressure on a weekly basis. There has been a period of around 2 months, like I mentioned, since basically the start of the correction, that we've seen a clearly sort of declining amount of a clear decline in the amount of BTC and Ethereum that is available on exchanges, and that was a pretty decent sign that we might be looking at a local bottom very sort of shortly, and then a potential for recovery, which eventually happened. It's the same thing that we've seen at the start of the rally back in October, where there was a massive decline in the amount of BTC on exchanges. So now, over the last maybe 10 days, there has been a clearly opposite trend. So in the past 10 days or so, once again, we are starting to see, according to some on-chain metrics, we are starting to see increased profit taking if you look at something like the supply of BTC on exchanges. That might be problematic for BTC's bulls to absorb in the short term, and we'll have to wait and see exactly what develops afterward. But Brian, if you also look at something like network profit loss for Bitcoin, you'll notice that there has been several sort of large spikes in Bitcoin's network profit loss over the last maybe 48 hours or so. So this also obviously could be impacted by these large exchange-related moves. But overall, it also seems to suggest that, on the whole, the Bitcoins that have been, or units of Bitcoin that have been moving on the blockchain over the last 48 hours or 2 days have been moving at a significant profit relative to the last time they moved on the blockchain. So that's another sort of sign that overall there is some profit-taking activity taking place in the past couple of days. And as a result, I mean, if you look at the last sort of profit-taking spike for Bitcoin, it happened right around that. What was it? There was like a 40K mark. Right before we sort of hit that local top and then went into a short correction before we were able to push another leg up. So that I wouldn't be surprised if that happens. I mean, it's already kind of happening. We've gone from 50K all the way down to low 47s. So there's already sort of a mini correction taking place, and it seems to be supported by on-chain data. There is a little bit of a worry about amongst some BTC holders, it seems, especially when you look at something like network profit loss and the supply of Bitcoin on exchanges.
Yeah, I like this chart a lot, and I don't look at this enough myself, but I think it's a tremendous way to really understand when that network realized profit loss is getting too high, typically is going to lead to some sort of correction. You can see it pretty clearly over time. And then the few times it goes negative, that's a great time to actually buy low in most cases. It's not a perfect science by any means, but this latest spike here, it was sizable, but it wasn't nearly what we saw, as Dino said, back in late July. So that being said, why don't we jump into some other on-chain metrics for the sake of time? We're already about 19 after the hour. Let's take a look at circulation really quick. So we had a bit of an uptick over this past week. It's not really something that would be considered significant, but you can kind of see from this pale pink line here, this is the 7-day moving average. We're getting a mild climb again, but overall, circulation is still low. It's not where it needs to be yet, and I can prove that by showing you guys the NVT model here. And what this is showing is the actual amount of circulation as divided by the overall market cap of Bitcoin at any given time. Red here means that the amount of circulation is coming up a bit short compared to where the market cap should be. And until that changes, it's going to be a bit of a volatile ride. You'll very rarely see just a massive long-term climb while there's an extended stretch of red here. you can see in recent times, going back to 2018, this was a correction moving down. This was also a correction moving down. And then this one, this 3-month one, was a bit of an anomaly where it actually was a little bit of a rise during the red time, but that quickly got canceled out by a bunch of green here where it just skyrocketed. So there's a very, very indicative correlation here that's impossible to deny. And right now, over the last couple days, these hash marks here are actually below the month average. So as we get through the last few days of August here, we'll see if we can get this red bar to tick down a little lower. It's going to be red no matter what, indicating bearishness, but it's not, at least over the last couple days, it's been encouraging with these trend lines here, which might be faint on the video. The hash marks of the last couple of days are indicating a mild increase in circulation, which is pushing the NVT ratio down just slightly. So now going back to the main Bitcoin tab, we're going to look at, we'll skip MVRV and social for just a moment. BitMEX perpetual contract funding rate is pretty much flat at the moment. Not a lot moving around here. It actually dipped into the negative very briefly, but has flattened out. It's actually been eerily quiet, at least on the BitMEX end. Dino, have you seen any other funding rates checking manually that have looked extremely volatile in any way? Your mic may have cut out.
Testing.
Nope. Now I hear you. Yep.
All right, sorry. So yeah, at the moment, pretty much all like high volume exchanges have their funding rates sort of hovering around 0.01%. Basically, a funding rate is a fee paid by one side of the perpetual contract to another. So basically, when funding rates are high, it means that the longs are paying shorts, and in general, it points to a prevailing or predominant bullish bias among derivative traders in particular. So as Brian is showing on the BitMEX end, there has been a relatively quiet time throughout this last rally, right? Between like 35 to 50K, BitMEX's funding rate has been pretty unimpressive. It has actually been that way on most high volume exchanges like Binance, Huobi, and OKX, suggesting that this rally was likely more sort of propelled by spot trading rather than derivatives. However, yes, around the 50K mark, there has actually been an uptick in the funding rates on several other exchanges. So Binance had a pretty sizable uptick around 0.03%, almost 0.04%. It was a 3-month high right as Bitcoin was approaching the 50K mark, suggesting that on Binance at least, the crowd was becoming increasingly confident about Bitcoin's sort of short-term potential. On OKX, we have seen a similar uptick. Huobi has actually remained flat throughout the whole thing. So I don't think the exchanges are currently uniform in their sort of derivatives data. Some are leaning or have been leaning a little bit more bullish throughout the weeks, but at the moment, everything is in the neutral. What I think that means is that this entire sort of stretch of Bitcoin's rally from the low of 29K all the way up to 50K has been largely sort of, impacted by, or mostly predominantly impacted by spot trading rather than derivatives. I think it also goes to show that, several sort of recent changes in how FTX and Binance have sort of been operating in terms of derivatives, lowering their overall leverage by, I think, from like 125x to just 20x at the max. I think that has also sort of reduce the appetite of some risky derivatives traders. So overall, the funding rate seems not to have that much of an impact on the market at the moment, which I think is a good thing for people that are looking at on-chain metrics, because I think as a result, what's going to probably be more prominent or more impactful on Bitcoin's price action is going to be actually what's happening on the chain rather than whatever is happening on centralized exchanges, Brian.
Yeah, I would agree. It's not. It seems to be much more related to spot trading than anything going on as far as the funding rate goes. But we're still going to continue to keep a close eye on it. Going down to address activity. It's been neutral, not enough to really get excited about here. We had a very mild spike at the beginning of the week, but it really kind of fizzled out quickly. And we're kind of back in that same 800K all the way up to just above a million. I think it got it at one point. It got to right there, if I can get it. Yeah, right at 1 million just about 10 days ago. But for the most part, until it's breaking 1 million, that's kind of the magic number right now. It's going to be showing that the total amount of unique addresses interacting on the BTC network is coming up just a little bit short for a sustained push above 50K, because as we can clearly see, when it was at that plus 50K level, all the way up to all-time highs, we were sitting at anywhere from 1 million to, getting as high on this spike a few days after the all-time high of 1.36 million.
Yeah. I mean, I wrote a weekly report on Monday where I think I even titled it Examining Bitcoin at 50K. So when I wrote it, Bitcoin was around that 50K mark. I think it just broke it. And in that report, I said that, sure, Bitcoin social metrics are still looking pretty decent, but what was relatively clear to me is that purely from an on-chain perspective, which obviously isn't the only thing that might impact the crypto market, but from a purely on-chain perspective, it's hard to justify Bitcoin at 50K, specifically because of, first of all, on Monday we had that massive spike in exchange inflow, but also address activity or general network activity has continued to lag behind its price. It doesn't look like it much here, but Brian, if you maybe zoom out to the last year of data, we'll see exactly how much it's lagging behind the price and just where we were the last time that Bitcoin was at around 50K, just so you can see exactly how low we are compared to the sort of first leg of this rally back in January and February. So from a perspective of total address activity, which, like I very often say, on-chain analysts use as a proxy for token-related demand. From that perspective, there's not a whole lot of demand compared to the last time that we broke 50K. As a result, it's difficult to justify Bitcoin's prolonged price rally if its address activity doesn't continue to pick up. Now, the good news is that obviously we are moving in an upward direction, right? So since sort of the end of July, since the bottom at around 29K, we have seen Bitcoin's daily active addresses like between July 15th and August 24th, so 2 days ago, there has been like an 18% rise in daily active addresses. So it's not like it's remaining completely stagnant. However, it's certainly not showing the same type of strength that we've seen throughout the first part of the rally. That's number one. And then number two, like Brian showed, the amount of actual value being transacted on the Bitcoin blockchain is falling quite short compared to the January and February part of this rally or this cycle, where general sort of amount of value transferred on the network completely exploded. So from some sort of those types of fundamental indicators that are supposed to show us how active is the network and how much value is being created on the network, we're still sort of in a relatively dormant zone. I would like for September more than anything is to see Bitcoin's on-chain activity explode once again, is to see our daily active addresses sort of average around 1.5 to 1.10 million a day, and then to see its circulation start moving up once again, because what that would suggest is that we are once again seeing a cycle of redistribution and people actually moving Bitcoin between addresses and more value being created on the Bitcoin network. All of those were markers of the start of the rally. So if at least history is something to go by, those should be things that we want to see the next time around, or moving into September for Bitcoin, Brian.
Yep. Thanks on address activity. We'll move down to mean dollar invested age now. This is the past year. Generally speaking, you want to see a downward slope, which would be indicative of the average age of dollars invested in Bitcoin getting younger as new investments came in or dormant older coins and investments were being moved. Right now, we're not really seeing that. We did see, I'm going to zoom in to just the last month here, because we saw a little bit of an encouraging sign. and that was right here. We've been on a constant climb since late July, so just about a month ago. But right around 3 days ago, we actually had some dormant stuff going on, and this likely had a lot to do with the exchange reshuffling and a lot of tokens being moved in a short period of time. Today so far, today so far, it looks like it's ticking back up again. But we'll check how that looks at the end of market close today. But as far as I'm seeing, we're still on an uptrend, which is going to indicate that investments are becoming a little bit more dormant than they have been. So if we go back to the last 6 months, yeah, go ahead, Dino.
If you look at the age consumed, which is a metric that tracks the renewed activity of previously dormant Bitcoins, you will see a little bit of an uptick over the last couple of days, especially since the correction. So typically, at least what that shows is that there has been a pivot from, of a certain amount of or certain groups of hodlers, people or addresses that have been dormant for a very long time, several years at least, that are once again starting to move their coins on the blockchain. And when that happens, it could, like Brian said, could definitely be sort of connected to this recent exchange reshuffling. But typically speaking, these large and especially sort of sustained spikes in age consumed seem to suggest a paradigm shift in the behavior of long-term holders. Now, age consumed isn't really a top indicator. It's more of a volatility indicator. So very often in the past, not just for Bitcoin, but look at any sort of ERC20 coin and enter their age consumed, and you will notice that every now and again, age consumed seems to coincide with either local tops or local bottoms, because it suggests a point in time where long-term holders are starting to make moves, or sort of moves that are probably predicated on where they think the market is going to be headed next. So yeah, we've also seen a little bit of an uptick in Bitcoin's age consumed, and that's the reason why mean dollar invested age for BTC has gone down slightly over the last couple of days. This is this is mostly an outlier. For me to really take age consumed spikes seriously, I like to see a cluster of spikes rather than these individual sort of prongs, because these individual prongs could mean literally anything. It could just be what, like I said a minute ago, it could just be Binance moving coins from their cold storage to hot storage, and then all of a sudden you see a spike in age consumed, obviously moving it between addresses, right? So all of a sudden you see a spike in age consumed, and you take that the wrong way. So that's why I like to see sort of a cluster of age consumed spikes, which would suggest to me that there's a concerted effort among a variety of long-term Bitcoin holders to move their bags. Currently, we're not really seeing that. There's just a little bit of a bump, Brian, that's probably responsible for what we're seeing in mean dollar invested age as well.
Right. Yeah. Age consumed and mean dollar invested age work kind of in tandem, because they're both relating to the amount of dormant coins being moved around. So this, as we just showed with mean dollar invested age, the one on the 24th here that was kind of an isolated spike, kind of correlated with that very mild tick down in mean dollar invested age. But as Dino mentioned, the clusters are really going to be what you're going to want to look for, because that could indicate, if it's correlating with the mean dollar invested age, that mean dollar invested age might actually be starting to move down for a longer period of time, which in turn would indicate the beginning of a bull run. So age consumed and mean dollar invested age had a very mild blip, but it's kind of back to its routine now. Why don't we also look here at whale behavior, specifically the millionaire absolute value chart that we love so much. It likes to do this sometimes where it just won't load a new template. So I'm going to reload. Why don't we do it? We'll do it this way and see if this works.
Sure. I mean, if you can't get it to work, I think I have it ready on my end, so I can share my screen.
Why don't you go ahead and share? Yeah, show us the millionaire absolute value tab, and then maybe we jump into social sentiment, then Ethereum, and then questions, I think.
All right, cool. So let me share my screen. See my screen here. Brian, just confirm when you can that it is in fact visible.
I'm seeing a black screen. What about you, Max? There it goes. Just came up.
All right. So this metric, supply distribution by balance of addresses, is an indicator that tracks the total amount of Bitcoin that is held by specific groups of addresses. Like, for example, if I click here on 100 to 1000 coins, what I'm seeing is the amount of BTC as percentage of total Bitcoin supply that is held by addresses holding between 100 and 1000 Bitcoin. Currently, they hold around 20% of Bitcoin's total supply. Based on
Hey,
our
Dino,
yeah,
your
go ahead.
your screen is frozen, it appears.
Yeah, so we've
It
had
looks
some
like it was
issues.
just a static image, yeah.
We've had some issues with Skype before the call. This is what I was concerned about, that we're not. It's good on stream? All right. Okay.
Good, that's all that matters.
All right.
Proceed, my bad.
So what I wanted to say was that based on our experience, these two groups combined 100 to 1000 and 1000 to 10,000 coins or addresses holding this amount of BTC. When we combine them or when we merge them as a sort of a single entity, they seem to show very interesting patterns, especially sort of when it comes to its correlation with Bitcoin's price action. So, since the start of the rally, there was a clear sort of accumulation spree by these addresses, suggesting that in fact there is or has been a sort of rise in institutional interest towards BTC. However, along the way, there were several sort of mini offloading events or periods in time where these addresses combined or their collective balance has actually shrunk, suggesting that they might be looking to take some profits, offload their bags to exchanges, and in general sort of liquidate their exposure a little bit for the time being. So the first time that we've seen it was right around this first local top here at around 40K, where there has been a pretty sizable decline in the amount of BTC held by these addresses. And then we have seen it coincide with several sort of local tops, both here and then here another sort of 60K drop in the amount of BTC held by these addresses. And then since the correction, there's definitely been a downslide in the total amount of BTC held by them, suggesting that as Bitcoin started to correct, so has the confidence of these large addresses towards Bitcoin's price action. After the correction, at the end of May, we are once again starting to see the amount of Bitcoin held by these addresses start to increase, suggesting a positive signal or sort of an optimistic sign that large addresses, that Bitcoin whales, millionaire addresses are starting to once again make moves, buy the dip, and stock up for the next rally. And this is in fact what happened. Now, over the last 2 weeks in particular, there has been a little bit of a more concerning decline in the amount of BTC held by these addresses. Now, I say a little bit because that's mostly been sort of the biggest culprit has been this one moment in time where the amount of Bitcoin, actually we can show the absolute amount of Bitcoin as well. Maybe that's going to be easier for people to understand. Let's unmerge this. Oh no, sorry, I merged the wrong one. There we go. So here now we're looking at the total amount of Bitcoin actually being held by these addresses. So here we can see that in a day, the amount of BTC held by these millionaire addresses goes from 9.23 million to 9.19 million. So in a day, 40,000 BTC goes away or sort of is offloaded by these addresses. Seems like it coincides with a pretty sizable drop for Bitcoin's price action, which is not surprising. But since then, we're sort of actually, we're hovering around that sort of 1.9, 1.8 level since today as well, 9.17. So it's actually not even though it looks like a sort of continuous decline, there's been one dip that has been mostly the reason why we're seeing a decline. And then since then, it's sort of plateaued. Now, obviously, a plateau itself is not a great sign either. We're not seeing a sort of massive amount of confidence by these large addresses at the moment or for the moment. But overall, they're staying sort of neutral throughout this last leg of the rally. What we would like to see, similar to address activity, similar to token circulation for Bitcoin, the thing that I would like to see moving into September is once again a shopping spree by these addresses, similar to what we've seen here since the local bottom at 29K. Sort of a period in time where the total amount of BTC held by these addresses starts to explode once again, suggesting that, all right, whales are sort of showing, at least on the chain, are showing signs of increased confidence in the top coin. For now, we're not really seeing it, but at the same time, I don't think it looks as dramatic as it is as dramatic as it looks right here. I think it's mostly sort of staying flat or plateauing. Yeah. So one last thing before we start taking questions. Actually, I'm gonna just prompt people to ask us questions in chat. So guys, I think there have already been a few requests for coins for us to look into in chat. But if you have specific assets, specific tokens that you are interested in, let us know in chat, and we'll do some live quick analysis on them. As we always say, currently our on-chain data is limited to Bitcoin, Ethereum, all ERC20 coins, XRP, Litecoin, and Binance Coin. Now, if you would like us to take a look at some of the coins that we don't have on-chain data for, we can still do that. We currently also have social data and development activity data for any coin in our database. But if you would like us to do some deeper analysis and more granular analysis, it's probably best that you ask us to look into coins that live on Ethereum, or that are Bitcoin, XRP, one of the others that I mentioned as well. So while you guys are asking us questions, and we'll take we'll look at the coins that are sort of the most popular in chat. While you're asking us questions, I think it's also important to look at where we are with Bitcoin social data. We haven't really talked about social metrics at all on this call so far. So what I want to start with is Bitcoin social volume, or the amount of mentions of Bitcoin on crypto social media over the last 6 months. So we have seen sort of an uptick, and I'll move this to a daily interval so that you see it. We have seen a little bit of an uptick since the sort of start of the rally. If I take this period, you see that there's a little, like a 64% rise in Bitcoin's social volume, daily social volume. But since then, it's actually stayed relatively flat. And I think, and I've mentioned this last time as well, or last week as well, I think this is pretty good for Bitcoin. Based on our analysis, based on our several event studies and backtests that we've done, massive spikes in social volume are not friends to cryptocurrencies, especially while they're pumping. Now, obviously, we have seen massive spikes in Bitcoin social volume here at the correction, but while a coin is pumping, when you see a rise in its social volume, what it seems to indicate is that the crowd is becoming a little bit overzealous, a little bit too greedy, and trigger happy, and as a result, there might be a increased risk of short-term correction. For now, we're not really seeing that as far as Bitcoin is concerned. Now, not only are we seeing at a pretty flat level of Bitcoin-related chatter, we're also seeing a relatively low emotions towards Bitcoin as well. So here we're looking at the sentiment towards Bitcoin on crypto social media. In particular, now I'm looking at Twitter's data, and you get access to this part of the platform as well when you become a Samebase Pro subscriber. But as you can see here, the average sentiment, or the average mood of all Bitcoin related mentions that we collect on a daily basis has actually been moving in a downward direction. Yeah, there have been several spikes so actually I would put it this way. So there has been a period of predominantly bearish atmosphere as Bitcoin corrected, and throughout June, where people were in low spirits, Bitcoin kept moving downward, breaking new lows, and as a result, in general, people were expecting further corrections. And then once we were able to recover above 29K very quickly, there has once again been a period of bullish sentiment towards Bitcoin as people started to once again believe that BTC is going to, be able to break 50K and then eventually break into a new all-time high. Now, at the moment, as BTC has sort of failed to capture this 50K level, over the last week or so, we are seeing once again a decline in the average sentiment towards BTC, which again, I think is not a bad thing at all. Previously, several sort of spikes in Bitcoin social sentiment, or sort of continuous stretches of positive sentiment, have not done well for BTC, because similar to spikes in social volume, what they suggest is that the crowd is becoming a bit too confident about the coin's price performance, and that's usually the time where the market sort of shows you exactly how strong it is. For example, we have seen massive spikes in social sentiment even during the correction, suggesting that the people thought, this would be a short correction. It's actually a pretty good idea to buy the dip at this point, because Bitcoin is looking very strong. These are mostly sort of news-related dumps. Probably a good idea to stock up on some BTC. In fact, it was not a good idea. I mean, sure, at the moment it is, but it was at the time not a short-term dip at all. So these large sort of confidence boosts in Bitcoin are not really a sign of positivity or optimism for BTC. So the fact that overall Bitcoin social sentiment is remaining low, Bitcoin social volume is remaining low, and then Bitcoin social dominance, which is sort of the measure of the amount of chatter towards Bitcoin relative to mentions of other top 100 coins, it's also staying pretty flat. So at the moment, there's no sort of rise in Bitcoin-related mentions compared to other large coins like Ethereum, Cardano, all of these coins that like Polkadot and Solana that have had massive weeks and massive price rallies. They have actually captured a lot more attention than BTC throughout August. All of this, I think, is good for BTC. From a purely social perspective, I don't have a problem with where BTC is today. And in fact, I think as long as we see sort of a continuous trend, continuous decline in average sentiment and decline in the amount of mentions of Bitcoin, as long as Bitcoin can, obviously, relatively speaking, remain under the radar, it can never really remain under the radar. But as long as the lion's share of crowd attention is not on Bitcoin, I think that's good. It allows Bitcoin to sort of push into a new rally without needing to worry about massively overvalued conditions and massive and irrational behavior of the crowd towards its price action. So yeah, on the social side, I think it's looking fine. What really concerns me are those several sort of on-chain indicators that we've already discussed. So we're about 40 minutes in. So Max, do you want to tell me what the most requested coins were on our chat so that we can start and take a look at some of them?
Yeah, we actually don't have too many ERC20 tokens requested or stuff that we have data on. What we do have data on, what about XRP? I think we haven't taken a look at it in quite some time.
Sure. Let's look at Ripple. Or sorry, XRP. All right. So let's start with the basic sort of on-chain overview of XRP, where we are now in terms of its general network activity, similar to what we've done with Bitcoin. Let's start with active addresses. What is the amount of unique addresses interacting with the XRP on a daily basis? And I'm going to zoom out to the last year just to kind of give you an idea of where we are right now. In general, it seems like the amount of unique addresses interacting with, and by interacting with, I simply mean sending or receiving XRP on a daily basis, it seems like it's growing steadily. Now, steadily is the key word. These large sort of immediate short-term spikes in address activity, usually what it points to is that a lot of addresses are actually moving their coins to an exchange. And then as it drops, as the amount of activity drops back to normal levels, there's a divergence between the price, which is growing, and the address activity, which is declining. And that's usually a bearish signal. So for XRP at the moment, I like this. 100% uptick in daily active addresses since, what was this? August 6th. Okay, so basically in the last 2 weeks, almost 100% uptick. That's good. I don't have a problem with this at all. Generally speaking, in at least my experience, sustained price rallies have sort of coincided or like to have a fundamental support of active addresses. Basically, we like to see sustained price rallies coincide with a strong uptick and sustained uptick in address activity as well. So yeah, Ripple or XRP is currently undergoing a mini correction here, but overall its on-chain activity is continuing to grow, and I think that's a positive signal. We'll see what happens in days to come, but especially if XRP's price continues to drop and the amount of activity on the network continues to rise, that would be considered a bullish divergence from a purely on-chain perspective. So something to keep an eye on, right? Now, another thing that I want to look into is what is the exchange inflow? Oh, right. We don't really have our database for exchange inflow for XRP, I think, is being redone. So, okay, let's move away to metrics that we currently actually have live on the platform for XRP. Let's look at MVRV. So we actually, we haven't talked about MVRV today. So for those of you that are not familiar with this metric, what MVRV does is it attempts to quantify the average profit or the average loss of all XRP addresses or all addresses that have acquired XRP within a certain time frame. So here we're looking at a 30-day MVRV ratio, and it currently stands at 14.7%. What that means is that the average profit of all addresses that have acquired XRP in the previous 30 days is plus 14.7, or let's say plus 15%. So the average profit of short-term XRP holders is plus 15%. They're still in profit despite this current, current downside. Now, how do you use this metric? Well, typically speaking, the way that on-chain analysts use this metric is they look at historical trends, and the higher the MVRV ratio gets, the more unclaimed profits there are, and as a result, the riskier it is, or the more likely it is that holders are going to start claiming those profits, and as a result, they're going to apply sell-side pressure, right? And potentially tank the price. And then the lower the MVRV ratio is, and the more it goes underwater or in negative territory, the more opportune time it can be to accumulate based on this metric alone. So the way that on-chain analysts then use it is they look at historical trends, and let's maybe take a look at the last 3 years of data. There we go. And to just kind of figure out, are we sort of in a zone or sort of at levels at which previously XRP holders were akin or sort of have shown a tendency to take profits, or we're not? So at the moment, this sort of, so at the moment, this sort of 14% level, obviously isn't a historical low or whatever. Like XRP has still had a pretty nice August overall, but it's also what is nice about it is that it's not at these sort of danger zone levels just yet. So what I'm seeing right now is this sort of anywhere around like 20 to 25% is usually where there has been a sort of a resistance level, or sort of short-term holders like to take profits. And then there are these sort of massive spikes every now and again, but they are very unsustainable. So whenever you see this, it seems that very often it doesn't last for longer than a couple of days before we start to see MVRV sort of normalize. And the only way for MVRV really to normalize in the short term is for the price action to drop. So if we move back in, so once we saw this sort of rise to about 60%, over the next couple of days, there has been a normalization of XRP's MVRV ratio. So that is as far as its short-term MVRV ratio is concerned. We're at about plus 15%. All that really means is that according to on-chain data, at least, there's short-term holders are about 15% in profit. So what you need to then decide for yourself is whether that's a concern for you, as far as whether you think these holders are going to start claiming those and realizing those profits, and as a result, maybe dumping their coins. And then we can also look at the long-term MVRV ratio for XRP. This is the 365-day MVRV ratio, and it itself is quite high. I mean, if you look at 2017, usually, first of all, MVRV ratios tend to sort of flatten out over time or during a subsequent bull cycle, so you shouldn't take this as sort of any sort of a reference point. But typically speaking, let's so this is where we were in 2017. But as people start to, become a bit more risk averse, even in crypto, they start taking profits before they get at like plus 700%, which they were in 2018, right? So let's just zoom in a little bit to give you a clear idea where we are. Long-term XRP holders, or all addresses that have acquired XRP in the past 365 days, are currently about 57% up on their initial investment. That's pretty high comparatively. Like over the last 3 years, there have been not a whole lot of days or weeks that XRP holders were more in profit than they are right now. So we see several outliers like here and then here throughout this rally, but overall it's still pretty high. Like I would personally much rather see it be at these sort of low levels, sort of almost historically low levels, because what that suggests is that there's going to be less of a sell side pressure, and in general, according to MVRV, the market looks a bit, or sort of the asset looks a bit undervalued, and that's where it's more likely to see sustained price recovery. At this point in time, a little bit of a concern, for sure. You can definitely see that it's not close to its bull cycle high or whatever, but at the same time, I wouldn't really count on, or sort of I wouldn't wait until XRP is at plus 250% before being a little bit concerned. So in my opinion, I would like to see XRP's MVRV ratio, long-term MVRV ratio, drop down a little bit before I could be a bit more confident. It seems like XRP holders, at least over the last 3 years, have not really been patient enough to reach these levels of average profits before they start taking those profits. So that's all that I can say about that. And then let's look at XRP's social volume. All right, so this is the amount of mentions of XRP on crypto social media. It's starting to pick up a little bit. Let's zoom in so you can see it. Yeah, it started to pick up a little bit actually right here around the local top. It's actually not all that high compared to several previous points throughout this rally. We can also check out the average sentiment towards Ripple. I would actually be quite interested in seeing where the average sentiment lies. It's actually negative, which is good. If you see where we were during the XRP's bull cycle high, we were quite positive, both here and here throughout this sort of second leg of a price recovery. And this is what I mean by saying these large spikes in social sentiment, they're not, like usually at least, they're not markers of sort of extreme, they're not markers of local bottoms or whatever. They're usually sort of, they suggest that we are in an overvalued territory. At the moment, XRP holders are quite bearish, which I think is where we should be if we want to see sort of increased price rallies or sort of a sustained price rallies. So its social data at least is looking okay-ish. All right, let's actually look at H consumed as well. Yeah, so the H consumed, like I said, it shows the renewed activity of previously dormant XRP coins. There has been a little bit of an uptick here, but overall not really anything to concern yourself with. Over time, it's actually declined quite a bit. So XRP holders are continuing to hodl, which I think is also a pretty respectable thing for XRP's future price potential. So what I like about XRP is its active addresses in particular. I mean, this is great, especially if XRP continues to dump and its on-chain activity continues to rise. I think this is a good sign. What I dislike about XRP is that there seems to be a little bit more of profits that can be claimed, especially by its long-term holders or cohorts. And that could have that sort of forming sell wall could be difficult for XRP bulls to absorb it, at least in the short term. So that's sort of my quick analysis on XRP based on at least a couple of metrics that I have here ready for me. Max, anything else that we want to look into?
Maybe we can give the social metrics of AVAX Avalanche a look.
Ah, right.
I think that got a lot of action, so people are interested in it.
Yes,
on the ERC20 side, we only have UBT requested, but we covered it last week, so I'm not sure if you want to go into that again.
I don't think we have data for AVAX, though.
Oh, but we have social data, right?
Yeah. Just not the on-chain data is what. Yeah, let's look at. Oh, there we go. Okay. So, my boy Avalanche. It's had a massive week for sure. We've actually checked it out a couple of times. I was looking whether it will show up in our social trends as one of the most discussed topics online or on crypto social media. It hasn't so far this week, but overall, you can definitely see a pretty sizable uptick in the total amount of AVAX or Avalanche-related mentions on crypto social media as it started to just explode. So the last time we've seen this, it happened at the high here, happened at the local top here, and then it's happening right now. So generally speaking, I would be a little bit too moderately concerned about AVAX's price action at these levels of social interaction because, like I said, what you're seeing here, it's not people, praising AVAX or Avalanche for its use cases and generally speaking about the longevity and sustainability of AVAX as a project or Avalanche as a project. What you're seeing here is a lot of people spamming rocket emojis and calling for another all-time high, for AVAX to moon, to pump their bags, whatever. There's a lot of chilling going on is what I'm saying at the moment for Avalanche. And that's typically speaking not a great sight. So if we look at its social sentiment, let's see where we are. Yeah, it's also sort of moving into the positive direction for sure, starting to, or sort of continuing to be more and more positive, but the average sentiment is progressively bullish toward the AVAX or Avalanche. So another sort of relatively concerning signal. We have seen a relatively positive sentiment here during its all-time high as well and during this local top. So yeah, from a purely social perspective or from a perspective of social data, Avalanche is a little bit overvalued. Now, whether that means, it could mean simply that there's a need for a short-term correction, and that's definitely what we're already seeing, right? So if we zoom in a little bit, yeah, that's already what we're seeing. Generally speaking, like spikes in social volume aren't like the nail in the coffin for the entire rally or whatever. It just means that the coin needs to cool down a little bit. Maybe not even lead to a correction. Sometimes it just leads to a price consolidation or a consolidation period for the coin for a couple of weeks. But yeah, it doesn't necessarily mean that AVAX can push another sort of leg up after the fact. It just means that for the moment, I would still be a little bit wary about entering into the coin. Maybe just wait for its social metrics to completely normalize, wait for the crowd to stop talking about it altogether, and also wait for the crowd to stop being so damn bullish about it before moving back into the coin. So just my 2 cents. All right, obviously none of this should be considered as financial advice. I'm just kind of showing what our metrics are saying at the moment, and informed by several of the backtests that we've done. I'm trying to draw some conclusions. You can actually see when I move from a 1-day interval to 8-hour interval, the 2 biggest spikes in AVAX's mentions came at this first top and then at the actual top of this rally, which is also interesting. All right, Max, anything else?
There's another request for Unibride, which we covered last week. And there's also a request for Hex. I'm not sure what you want to get into.
Let's start with Unibride and then we can look at the Hex. We can do it again. So also a little bit of an uptick in social volume for Unibride, but not actually as high. Actually, I mean, comparatively speaking, but it doesn't seem like we have a whole lot of Unibride mentions overall. Like it's pretty low, like 4 or 5 mentions. So either there's not a whole lot of mentions. This is on an 8-hour interval, of course. Maybe the channels that we track, maybe we need to add more Unibride related channels or whatever. But it seems like, at least on the social platforms and social channels that we were tracking, it's relatively low. Even that being said, we're picking up some increased social chatter towards Unibride, which again, like I've just shown you what typically happens with coins on Avalanche when there's a spike in social volume. So take that for what you want. Now let's look at its general activity. All right, yeah. So they were seeing a bearish divergence here. Yeah. So what we're seeing in the past basically 3 days is there has been a spike in daily active addresses, but it's a very short-lived spike. So I wonder if I take a look at active deposits, whether there was a spike in active deposits as well. Let me take a look. Kinda, a little bit, at least since the start of the week. I would actually have expected it to be a bit higher. Maybe exchange inflow. A little bit of an uptick, but not anything all that impressive. Overall, however, there's been a spike in active addresses. We've gone from about 240 to 600, so that's what, 2.5x in about a day. Massive spike in on-chain activity, but it's been very short-lived, and so the prices continue to rise, but the amount of on-chain activity has started to normalize, move back into its normal range. So this usually we consider as a sort of a bearish divergence. So what I would like to see, if I am a UBT bull, is I would like to see on-chain activity start to pick up again. Otherwise, it means that the price of UBT is rising into a declining network activity, and sometimes that's not a great thing. It's generally a sign that it's declining into sort of lower network-wide demand. So you can kind of imagine what that can do to a coin. Let's look at. Yeah, and so generally speaking, I think I mentioned this last time. UBT has these sort of short-term spikes in active addresses, but similar to what I talked about when I saw what was the coin that we looked at? We also saw these like short-term spikes in daily active addresses. Whatever it was, when you see it and when it immediately drops back down to earth, it means that most of these spikes are typically sort of sell-side spikes or addresses looking to offload their bag. So that's why you'll see some of them sort of coincide with large spikes in active deposits like here and here, because it's not that there's a sort of a proliferation of activity on the network just because of the coin's utility or whatever. The spike in activity is due to its price action, and as a result, people are moving to sell. So all right, let's look at the total sort of sell-side pressure, at least on-chain for UBT. I think I mentioned this as well last time. It's actually not that high, which is good, right? Supply in exchanges is continuing to drop for UBT. And I think, so this is something that I like. I think 1 year is fine, actually. So this is something that I like. there's a reduction in the supply of available UBT on exchanges, at least on the exchanges that we track, which is a bunch of them. I think we have about like 280 different wallets that we currently track. So we've gone from, at the start of the rally in September, 16 or almost 17% of total UBT supply was found on exchanges, to just 8.5% now. So assuming unchanged demand, if there's a reduction in the available supply of tokens to trade on exchanges, this could sort of lead to a inflation of the coin's price sort of over time. Like if you look at Bitcoin supply on exchanges, this is what we've seen during the beginning of the rally as well, and also what we've seen at the beginning of this sort of part of the rally as well. Now we're seeing it start to pick up, and we've seen it start to pick up here and also during the May correction. So when you look at UBT, yeah, I think this is a decent sign that you know, maybe there's something that I'm not taking into account here. Maybe is UBT sort of exclusively trading or on some shady exchange that we're not tracking, and that's the reason why it's continuously dropping in its supply on exchanges. Maybe I don't think so. But overall, if this is legitimate, I can take a look after the call. But if this is legitimate, I think it's a from a long-term perspective, it's a good sign. Whether it's going to whether this particular part of the rally is going to just continue bursting through the seams, not convinced, especially because it's sort of a bearish divergence between the price and on daily active addresses. But as long as you see a reduction in sell side pressure, the coin is doing okay, I think, assuming unchanged demand. So if the demand is also declining, that's a different thing. All right, let's see where we are with MVRV. Yeah, it's pretty high. I mean, just no way to sugarcoat it. Take a look. Okay, so this is last year. This is the 30-day MVRV ratio for UBT. I mean, yeah, 35% seems to be a pretty close to a danger zone for UBT. Right at the sort of resistance level right now, and several times, yeah, it's sort of managed to explode above this level, but 24 hours later it moves back down to earth, and as it moves, so does the price. So from a short-term perspective, it seems like at about 35-40%, we've seen this sort of be the peak MVRV ratio for UBT, at least throughout the last year. And then if we look at the long-term MVRV ratio, it's also pretty high. Yeah, this is what I dislike with these rallies, especially when they look like this. So we're sort of very quickly approaching the 300, the peak MVRV ratio of this bull cycle, at about, what is this, 120, no, 180%. We're currently at 136, 140%. This is also sort of pretty similar to what we've seen in May, right? 190%. Yeah, so then if we zoom out even further. Yeah, so, and again, like I said, with every subsequent bull cycle, generally speaking, especially these long-term MVRV ratios seem to decline. I mentioned this with XRP as well. So I wouldn't sort of take this as like, oh, this is the level that we still have some room to grow. I wouldn't analyze it that way, at least. So both from a long-term and short-term perspective of UBT's MVRV ratio, we're overvalued. Now, whether that means that we're going to immediately see a correction, especially when we're at a sort of a uncharted territory, price discovery, remains to be seen. But not looking all that hot. Like, I personally, at least, wouldn't necessarily look into entering a coin with extremely high MVRVs, both short-term and long-term MVRVs, because it means that a lot of people are already in profit, and I don't want to be the last guy coming into a trade. But that's just me. Can we look at natural profit loss? See what's going on. Yeah, also profit taking is starting to ramp up. A few spikes here and there. This massive spike right before this mini correction, but then another sort of prong. So for those that are unfamiliar with how this metric works, basically what we do is for each unit of UBT that moves on the blockchain, we take the price at which it was last moved. Let's say there was the unit of UBT last moved here, and we assume that this was its buy price. And then the next time that it moves, let's say it moved yesterday, at the start of the week, we assume that this was its sell price. So then the difference between these two prices for all daily transactions becomes this metric. And so when you see spikes in net profit loss, it means that on average, all UBT coins that are moving on the blockchain are moving at significant profit relative to the last time they moved. And so the assumption is that at least part of that is people taking profits or addresses taking profits. So that's why sometimes you will see spikes in profit taken around local tops here, here, and here before a correction. So also here before this sort of mini drop, but in general, sort of there's definitely an uptick in profit taking activity for UBT, which is another sort of yellow flag, I would say, at least in the short term. I think there's enough sort of signs for me to suggest that say that I at least wouldn't be surprised if I saw a little bit of a cool down period or at least a consolidation for UBT before it maybe sort of musters the strength for another leg up. But yeah. All right, Max, did you say Hex for the last one?
Yes, exactly.
Okay. Let's look at Hex. Okay. So Hex's active addresses are sort of a little bit deflatory. At least have been in the past past couple of weeks, maybe a month or so. So this has been a little bit of a sort of a bearish divergence. The price growing into a sort of relatively low on-chain activity. Now that being said, I just wanted to be clear that 26,000 addresses interacting with a coin at any point in time on Ethereum still puts it in like the top 10, I think, coins. We can easily check this. If you look at a screener. What I'm going to do is I'm going to show you the total amount of ERC20 coins that have had more than 2,000 daily active addresses. An average of 2,000 daily active addresses in the past week, let's say. So I'm going to reset all filters here. So we start with market segments, and I say, show me only the coins that live on Ethereum. And that's going to lower my list to 1,200 assets. And then I select daily active addresses, and I say, show me only the coins that have had more than 2,000 daily active addresses in the last week. This is the list. It's 12 coins, and Hex is actually number 3 on this list. Ethereum, Tether, Hex. So yeah, the total sort of the trend is in a downward direction, but it's still one of the more actively used coins on the Ethereum network on a day-to-day basis. The amount of addresses that are interacting with Hex is relatively high. There's no other way to put it. Now, this I think you also probably need to consider it as a outlier. Now, I'm not sort of super attuned to what Hex has been doing recently. So maybe there was some sort of an event or some sort of an airdrop or a particular reason why there was a sort of a massive uptick in the Hex related address activity. But actually, if you sort of take this out and consider it an outlier, it's remained relatively stable, which is also something to consider. Now let's look at social volume for Hex. Okay, it's actually like we've seen it here at around the top, but it's definitely starting to pick up, but not as much as I would expect. For sure, there's an uptick in social sort of prominence of Hex. Let's look at its sentiment. Yeah, it's starting to pick up again, isn't it? It is, yeah. So another sort of a relatively concerning signal is that you see throughout this part, we've actually moved down as Hex seems to have sort of stopped its trend here or corrected a little bit, but now once again we're moving into a positive direction. So overall, another sort of period of increased sentiment towards Hex, and then when you see previous spikes in Hex sentiment here, and then now, yeah, it's sort of relatively low, so there might be a little bit more of an excitement for Hex up ahead. But it's definitely moving into that period where people are becoming a bit too extremely confident about Hex and a bit too shilly and a bit too greedy. Oh, sorry. So anyway, that's what I've got for Hex. Actually, can we look at its? Let me just put my Telegram here. All right, let's look at exchange info for Hex. I'm curious. Yeah, this is also a decent signal. So this is the amount of Hex moving to known exchange wallets over the last, what is this, a year? Let's take the 6 months. So definitely an uptick in Hex-related inflows here at its high here. But since then, it's actually been pretty low. So supply and exchanges declining as well. This is what I like to see. This type of divergence is a decent divergence. The amount of availability of Hex on exchange is declining, and its price moving into the opposite direction. All right. Finally, let's look at its MVRV to kind of really see where we're at. Sorry. Yeah, so this is all of these coins that have been pumping like crazy. This is what they look like now. They look like they're at a precipice, at a danger zone, compared to sort of its historical data, at a point in time where you can no longer say that they're really undervalued, at least according to MVRV ratio, and plus 75% profits on average for Hex holders that have acquired Hex in the previous 30 days. It means that there's an increased likelihood that some of these addresses are going to start to take profits. And as they start to take profits, we might see a short-term correction. We've seen, actually, the last time that we've seen Hex holders was at about plus, what was this? 66%. So we've already passed through this level. During this correction, it was at about plus 97%. So we're sort of in the middle of the way between those two peaks. But yeah, I mean, certainly in a sort of upper third of its MVRV ratio. And then if we look at its long-term MVRV ratio, yeah, so it's had a sort of a historical level, a rally, sorry. So its general MVRV ratio is relatively low, but it's still super high. So all addresses that have acquired Hex in the previous 365 days, the average profit is about 600-700%. There's more than enough sort of potential for Hex holders to start claiming some of these profits. So I would be a little bit concerned just because of that increase in social sentiment and the MVRV ratio where it is similar to Unibride. It's kind of, yeah, it's its onchain activity. Sorry, what was it? It wasn't Unibride. It was the one that I was looking at before. Whatever coin I was looking at that had sort of a decent uptick in its on-chain activity, but its MVRV ratio was at around this danger level. So for a short-term, from a short-term perspective, this is what I would look at as a more pressing signal, is what is the potential sell-side pressure? And for Hex, it seems like it's relatively high. Remains to be seen, obviously. And like I said, these are, what I'm looking at here are sort of very short-term signals. So it doesn't mean that sort of in a couple of weeks, a month or so, Hex can recover, but it seems like there's an increased risk of a short-term correction, a cooling off period, a period for all of these metrics that are a bit too overblown at the moment, overinflated to normalize before we can, see further gains. But yeah, 2,600 addresses still puts Hex in the very upper echelon of daily activity on the Ethereum network, and that's nothing to scoff at. It's got more addresses interacting with it on a daily basis than Chainlink, than DAI. I mean, it's a used coin, one way or another. So that's gonna be it for us today, guys. It's 20 minutes past 5. It's at least on my end. So that's usually when we cut this stream short. Brian, anything to add before we go away for the week?
I've got nothing for now, guys. Keep the eyes on all the charts we've been showing here, as it is a pretty volatile time. Spread the word. Give us a subscribe on YouTube if you haven't already. We really appreciate the help and support as our YouTube continues to grow and more people come in and visit for these calls and our other analyses that we do here. So really appreciate your guys' time as always, and looking forward to chatting with you all next week.
One last thing to mention is that if you're not already a pro subscriber to Sandbase and you need a gentle push into the right direction, you can use a promo code TWIC, which stands for This Week in Crypto, which is the name of this call. So everybody that stays until the end of this call, we always flash this discount coupon that you can use during your checkout to get 25% off your first billing cycle. Now that can be a monthly or it can be a yearly plan for Sandbase Pro. So whatever you feel comfortable with. If you're already sort of on the fence, you can use this promo code to push you over that fence in a positive way. So guys, we're gonna be back early next week. We're gonna be doing more YouTube content, not just these weekly streams, but also sort of midweek updates on where the market is headed. Not just for Bitcoin, but we're gonna start sort of branching out into other coins and doing some sort of shorter market analysis on YouTube as well. Until then, check out our insights. We've got a few very interesting sort of articles that we've written over the last week. So if you don't want to wait until next week to talk to us, number one, check out our insights, and number two, join our Discord. The link is in the description. We've got several active groups where people share their opinions about where the market is going to be headed next. If you want to be part of that group, link is in the description of this video. Take care, everyone, and talk to you in 7 days. All right.
Thanks guys.